Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the E-minis, the S&P 500 futures contract. In the last update, the E-minis were battling this cloud chart resistance zone there, and the lagging line was also testing the cloud there. So we managed to break past that resistance zone significantly. And now we're testing the standard line, the old standard line there, as well as these resistance zones there. The next level is 4570 with the next target of 4596 or 4600 basically. And then we're moving back into this resistance zone. So these are the upside resistance. It's a bit of a slow grind now after a nice, very strong rally. Looks like the daily ranges are narrowing, and it becomes now a bit of a grind to get past these three levels of resistance. So far so good. We're above this old cloud chart resistance zone, which was quite a significant one. This can come back into play as a key support zone over the next couple of weeks. If support fails there, we could retest the bottom end of the cloud to see for support there, or this level there of 4478. But so far so good. Very strong rally, a seasonal rally deep into November. Will be interesting to see if this rally momentum is going to be maintained. Now that we're so close to these upside resistance targets, got to this one 4570, the next one 4600 basically, and then these old highs there, plus that cluster of highs there at between 4664 and 4683. So these are the upside resistance targets, but not without some form of a consolidation. We're a little bit extended from the top end of the cloud here, and very close to this significant old cloud chart resistance zone. So this zone between the top end of the cloud here and this standard line that we've projected through is a cluster of a resistance that that's the upside target for the current rally. If this resistance holds, we could snap back to consolidate back down, and if we look at a Fibonacci retracement there, if we look at from this high, where that level is at 23% Fibonacci retracement, brings us back down to more or less where the standard line of the cloud looks like it wants to settle. So that's the downside consolidation risk target 4465 if this resistance holds. Now if the index managed to break past that resistance, let me just move that Fibonacci line there, and we hit the upside top end of the cloud, then you can see where that Fibonacci retracement is. But interestingly, 38% retracement is quite far down, so we're quite far extended from that level. But the downside risk target would be the standard line of the cloud at 4465, and that should be a support zone for November and December. So we do need to see some form of a consolidation, a very strong move in a very short space of time here. And if we look at the weekly Ichimoku, you can see we're up for four weeks now. Will we get to a fifth up week and then retest these old resistance levels with the ultimate high there at the July highs as the next upside resistance targets? Now, interestingly enough, the support zone, the front end of the cloud there, that's 4453 is a significant support zone, as well as the top end of the cloud there. So these are the downside support targets. If the market rallies and consolidates back down in December, then make another attempt for the year-end rally into January to retest the 4664 and 4683 upside resistance targets. So that's kind of what we're looking for this current rally. Now, looking at the 4-hour Ichimoku, there we can see we had a fantastic support buy there, cloud cross buy signal there. Another one breaking through the bottom end of the cloud, breaking through the top end of the cloud, and off we go. And interestingly enough, if we overlay these signals with the Fulgent AI engine, artificial intelligence engine, we can see we had a nice volatility breakout signal here that's still active there. So very strong rally there in the S&P 500 Index Future based on artificial intelligence. Now on this chart, the things to note out for critical, the front end of the cloud here is a significant support zone there on the 4-hour, as well as the standing line there and the top end of the cloud. So there's a cluster of support. That's a support zone, and the bottom end of the cloud there, this significant one, 4446, is a significant support zone on the 4 hours. So keep in mind for that, for any potential consolidation back down, and then another attempt at a year-end rally. But so far so good, very strong performance, and the daily keeps us on the right side of the trade. Yeah, just be aware that there's consolidation risk now, because we are closer to the 4,600 top end cloud chart resistance zone. Just a quick point to note, looking at the S&P 500 Spider ETF and the equal weighted ETF, you can see clearly there's a massive difference in market performance there, with 82% of this year's performance coming from the top 10 stocks. You can see the market breadth, and the rally is very narrow, very concentrated in a few large cap stocks. The equal weight ETF is still struggling with a significant resistance zone at the top end of the cloud. It's very close to the bottom end lows here. So these lows here that used to be support is now a new resistance zone. So it will be interesting to see if the large cap is going to consolidate and the rest of the market picks up and breaks past this zone. So keep an eye on that in the equal weighted one. And yeah, you can see how the top 10 tech companies really made up for all the performance this year and broke past the top end of the cloud and close to top end resistance zone. So the question now becomes, will the tech companies consolidate and the rest of the market catch up, or will the resistance level hold for the rest of the market and the top tech companies come back and consolidate back down to key support zones? So keep that in mind. There's a significant risk factor that the market rally is very narrow and very concentrated in a few large cap stocks. Just back to the key catalyst to watch out for. Will this resistance level, what's now support zone, will the support hold, or are we going to dip back and retest the 23.6 Fibonacci retracement zone, or are we going to continue to break past the top end or test the top end cloud chart resistance zone? So that's a catalyst to look out for this week. Will the market rally meet the basically 4,600 resistance zone and then pull back? So that's the downside risk, is that we now, whether in a major resistance zone on an Ichimoku cloud chart basis. Thanks for watching, and until next time, happy cloud chart trading. Bye for now.